A 1099 you weren't expecting just showed up, maybe even months after you already filed, and your stomach drops. Take a breath. A surprise 1099 is usually smaller than it looks, sometimes flat out wrong, and always manageable if you handle it in the right order. Here's exactly what to do, step by step. Let's break it down. First, what a 1099 actually is. It's an information form that reports income paid to you, and a copy goes to the IRS at the same time it goes to you. That's the real source of the dread. The IRS already has its copy, which is exactly why the worst thing you can do is nothing. Here's what happens if you ignore it. The IRS runs an automated matching program that compares every form it receives to what's on your return. Leave a 1099 off, and a computer catches it, usually a year or two later, and mails you a CP 2000 notice proposing extra tax, a penalty, and interest. Ignoring a 1099 doesn't make it disappear. It just adds penalties. So rule number 1, before anything else, never ignore a 1099, even one you think is wrong. Ignoring it is the single move that guarantees a problem. Everything else we're about to do is fixable. Silence is the only option that isn't. Now, surprise 1099s come in a lot of flavors, and the type changes everything. There's the 1099 NEC for freelance and contractor pay, the 1099K from payment apps, the 1099 MISC for rent and prizes, 1099 INT and DIV from banks and investments, a 1099G for unemployment or estate refund, a 1099 are for retirement money, and the sneaky one, a 1099 C for canceled debt. So step 1 is simply, don't panic, identify what kind it is. Because where it goes on your return, and even whether you owe anything at all, depends entirely on the type. A 1099 for canceled debt is a completely different animal from a 1099 for freelance work. Read the form and find the code in the corner. Let's look at the most common surprise, the 1099 NEC. This is the real form. Box 1, non-employee compensation, is the freelance, contractor, or side gig pay someone reported paying you. If a client sends one for work you forgot about, this is the box with the number that has to show up on your return. Step 2, verify it's actually correct before you accept it. Surprise 1099s are wrong more often than you'd think. Check the amount, check the tax year, and make sure it's even yours. Common errors, a doubled amount, the wrong year, a duplicate, someone else's form, or a 1099K that swept in personal Venmo payments as if they were income. If the form is wrong, don't just eat the error. Contact whoever issued it and ask for a corrected 1099. There's literally a corrected box they check when they reissue it. A legitimate payer will fix a genuine mistake. Get the corrected version before you file, and the problem is gone. Step 3, put it in the right place. A 1099 NEC for freelance work goes on Schedule C as business income, where you also get to deduct expenses. A 1099K goes on Schedule C2, or gets reconciled if it included personal money. The type tells you the destination. The other types have their own homes. A 1099 MISC for rent goes on Schedule E. Unemployment on a 1099G goes on Schedule 1. Interest and dividends go on Schedule B. And a 1099 are for retirement money goes on your 1040 and may carry a 10% penalty if you took it out early. Each one has a place. None of them have nowhere. Now here's the relief most people miss. Step 4. A 1099 NEC reports your gross pay before any of your costs. Once it's on Schedule C, you deduct your business expenses against it, and you're taxed only on the net. So that scary $4,000 form might really be a couple thousand of taxable profit. The headline number is rarely the tax number. Let's talk about the one that truly blindsides people, the 1099-C for canceled debt. If a lender forgives a debt, say you settled a credit card for less than you owed, the forgiven amount is generally treated as taxable income. People get a 1099-C a year later and have no idea why the IRS thinks they earn money they never received. But here's the relief valve, and it's a big one. If you were insolvent when the debt was canceled, meaning you owed more than everything you owned was worth, you can exclude that canceled debt from your income using Form 982. So a 1099-C is scary, but for a lot of people it ends up being little or no tax once insolvency is applied. Don't assume you owe on it. Step 5, for the stubborn cases. If a form is genuinely wrong and the issuer simply won't fix it, you still don't ignore it. You report the amount on your return so it matches the IRS copy, and then back out the incorrect part with an explanation. Reported and explained keeps the matching computer happy. Omitted and silent does not. Let's make it real. Example 1. A freelancer gets a surprise 1,099 NEC for $4,000 from a client they forgot about. Panic sets in, but they put it on Schedule C and deduct $1,200 of real expenses, software, mileage, supplies. Now they're taxed on $2,800, not $4,000. Compare that to ignoring it. The matching program flags the missing $4,000, sends a CP $2,000, and proposes tax on the full amount, with no deductions applied, plus a 20% accuracy penalty and interest. Handling it cost a little tax on $2,800. Ignoring it cost more tax on $4,000, plus penalties. Reporting always wins. Example 2. The canceled debt scare. Someone settles a credit card and gets a 1099-C for $6,000 of forgiven debt. On its face, that's $6,000 of taxable income. But at the time it was canceled, they were insolvent. Their debts exceeded their assets by $10,000. They file Form 982, and the entire $6,000 is excluded. So after the dust settles, the tax on that terrifying $6,000 form is zero. That's the whole lesson of the 1099-C. A scary form is not automatically a tax bill. Identify it, check for an exclusion, and only then figure out what, if anything, you actually owe. So here's your 5-step system for any surprise 1099. Don't ignore it. Verify it's correct. Identify the type and where it goes. Deduct or exclude everything you're entitled to. And if it's wrong, get it corrected or report in back out. Do those in order, and a surprise 1099 goes from panic to paperwork. Quick recap. The IRS has a copy of every 1099, so never ignore one. That's what triggers a CP 2000. Identify the type, because each goes somewhere different. A 1,099 NEC is gross, so deductions shrink it. And a 1099-C for canceled debt is often erased by insolvency. Scary forms are usually smaller, and sometimes wrong. One quick note on who makes this. The tax breakdown is prepared by a tax accountant with over 15 years of public accounting experience, so every figure here is checked against the IRS sources. It's always educational, never advice for your specific situation. Bottom line, a surprise 1099 is not a crisis. It's a checklist. Don't ignore it, verify it, route it, and claim every deduction or exclusion you're owed. Do that, and the scary envelope becomes a 10-minute task. This is general education, not tax advice, so check with a pro about your situation. Subscribe to the Tax Breakdown for simple tax-saving tips before you file.